edtech firms have been an edict has been passed for them to be not for profit. A foreign curriculum is coming into new kinds of scrutiny. uh, no tutoring on holidays. Now, I think it is important for me to also mention that some of these might turn out to be false alarms in the next few weeks. But these are some scrutinized information that we have been tracking, and ownerships, raising capital, all of these has resulted in quite a chaos, especially in the investors' minds, and the impact has been seen far and wide, including the Golden Dragon Index in New York. That itself has seen a 30% drop, not to count the 40, 50, 60% drops in the market cap of edtech companies in China. One hope chest, or a very interesting optimistic interpretation of this is that, I personally have always held that the global edtech capital over the next decade will find its foundation, base, and home in India, pretty much similar to what we see in IT services. And this just could be that event that we look back upon a decade from now and say that this one hastened the process and also was decisive in the outcome, where Indian edtech companies have gone and built out their next level of growth with their base in India, but with global markets as the opportunity. I'll move forward. Uh, as I said, the physical touch business has been zero on both sides, on test prep side and also on the Keystone side, which translates into classes and events. We ended up servicing about 18,000 paid customers. The postponement of exams continues to remain a big concern for us. Hopefully, now the next big exam season begins only in the December, in the October, November, December, and then onwards. So hopefully that should be fine. But unless it happens, this will remain a concern. Corporate business Keystone revenues have been up, and Arjun will cover a little bit more, and Nikhil can step in to answer in your Q&A. The virtual events platform has seen a very good pickup in various markets globally. The institutional business has been a challenge because institutions, which is basically universities that contribute significant part of our institutional revenues, they have been challenged both in terms of their own revenues, etc., as well as their seasonality, which comes from admissions, outreach, and so on. So these have been a summary of our second wave impact observed over the last 3 months. I'll pause here and hand it over to you, Arjun, to pick it up from here.
Thanks, Satya. I'll just run you guys over the business updates as far as our specific segments are concerned. For us, from a test prep business perspective, as Satya mentioned, everything was digital over the last 3 months, like it has been for the better part of the last 18 months. From a comparative perspective, though, the business teams have done well. Our GMV is up about 16%, while our net billing has been up 17% in this quarter. We've also seen some positive signs in specific markets, especially our aptitude test prep segments, where our MBA billings, our law billings, and our after 12, which is the BBA IPM segment billings, have all shown a positive sign compared to the same quarter last year. Our business partners have also we've kept a few centers open as points of sale and completely in line with state government regulations, and our business partner revenues are up. 18% from 14 CR to 17 CR in this quarter. We have heard rumblings, and I'm sure you as people who follow this space regularly have also seen that there is news of schools and especially classes 9 to 12 opening up in select states over the next month or so. We've seen news of that emerging out of Haryana, UP, Andhra, and other select markets. So there is a chance that we would see some sort of return to schools and to institutions starting from August. But as Satya mentioned previously, Diwali and post Diwali looks like uh, a better time period to keep in mind in terms of a return to some semblance of normalcy. Of course, contingent upon how the third wave turns out. As far as our enterprise business is concerned, we've done a business of about 18 crores. This is up from about 16 crores in the same quarter last year, and our EBITDA margin for our Keystone India business is up from 3% to 9%. So the digital wave, as Satya mentioned, has had a very positive impact on our enterprise corporate business as well. Uh, Specifically with regards to our virtual events business, we had an order book of about 1 million USD in the last financial year after we set this product up and took it to market. We've had a great start to this financial year. We in Q1 we've got an order book of about 750,000 USD. So we're well on track towards doing significantly better than we did last year, and giving the enterprise business wings to chart its own growth curve. International markets especially will play a key role in terms of driving this growth, and especially out of our business, which is based out of Singapore. Amazon, Cisco, Dell remain critical clients, and even in the US, where the COVID wave has moved in a slightly different direction as compared to India, there are talks of some return to a hybrid model, which would help our events business accelerate a little bit in terms of a return to normalcy, where there could be some sort of a return to a mix of physical and virtual events in the quarters ahead. Our institutional business, as Satya mentioned, has been impacted by the significant delay in the examination cycle, which has obviously affected the admission cycle. And that is something that has effectively pushed everything back by at least a quarter. Central universities like Delhi University, Mumbai University are all currently still doing their admissions for first year. And so that also has an impact on the private university business. From our end, we did our first undergraduate summit for students in this quarter for the year. We had an attendance of about 3,000 students took part in this event. And from our side, we're doing a lot to expand our digital inventory in the enterprise institutional domain, which we believe will have a positive impact on our margins going forward. The publishing business is also starting to show signs of life. You'll remember from our presentations of last year, COVID had hit this business particularly badly, with a lot of retailers, distributors, wholesalers, everyone pretty much shut, and also with transport being largely limited to its essential services. The book services and the publishing businesses across India and across a lot of the world were affected. We've done a fantastic job at our end in terms of shifting our focus towards the online and institutional space, which is now 90% of our business. And we've made a concerted effort to ensure that our focus in this business is to leverage our existing stock and to focus on a POD model where we only print new stock where someone is paying for it upfront and with virtually no inventory. I'll move forward by just giving you a demonstration of some exciting work we're doing in the enterprise space. Cosmos is something that Keystone has produced. It is still very much at a very early stage, and it has three particular elements in it. This includes a DIY events business, which is about a few months still away from going out to the marketplace, but we're doing a pilot of this with some select customers. We have a webinar business of the same as well. And what I will do today is I'll give you a quick demonstration of our Vosmos virtual store that we have created for Dell in collaboration with Redington. And I'll just move out of the PPT for a quick second and do a screen share of what a virtual store looks like uh, that our Keystone team has prepared. This is what it looks like if you walk into one of our Keystone virtual stores. I'll just give you a 360 view of the same. This is if I enter the lobby and I have these different products available of Dell that I can take a look at. We have their laptops, their servers, and so on. I'll just enter into the laptop space and give you a quick overview of what it looks like. You can take a look at the different laptops available, uh, watch a video which will give you a 3D representation of the same, and you can click on it and uh, and actually purchase the product as well. So just to give you a bit of a demonstration into what a superstore looks like on a virtual uh, at a virtual level today. I'll also circulate the link of this and make it available for those of you who want to spend a little bit more time looking at it offline. Going back to the PPT, so the virtual store concept is now live. We're looking at rolling this out as part of our Keystone Enterprise business uh, to different markets over the coming months. And as I shared previously, the DIY events and the webinar business is still under pilot testing, and we're looking to roll that out in a couple of quarters down the line. Moving ahead. Uh, this is just a quick view of some of the events that we've been doing in Keystone. I spoke to you about how our international business is absolutely crucial going forward, and this was an event we did virtually for Middle East banks in April. This is an event that we did with Microsoft. Just to give you a quick overview of some of the great work we've been doing at Keystone over the last few months. I'll move into the financials now. Uh, you would have seen some of these if you had gone through our standalone and consolidated results that were posted last night. Our operating revenue is up 10% on a year-on-year basis from 47 to 52, and our uh, adjusted EBITDA is more or less flat. Uh, our operating EBITDA is up from 3.8 to 6.3, and I'll walk you through that in my next slide. Our adjusted PAT is also up 81% from 1.6 CR to 3 CR on a year-on-year basis. Moving forward, as I was sharing just recently, our operating EBITDA is up from 3.8 crores to 6.2 crores. That's about 64%. The difference between the operating EBITDA and the EBITDA is one-time income that would have hit our other income on account of some interest from tax refunds and some liabilities that were written back. So if I were to just look at it from a business perspective, our revenues are up almost 5 crores, which is 10%, and our EBITDA is up by 64%. EBITDA margins too are up from 8 to 12%. Moving forward, our cash position is fairly similar to where we were in March. I had shared with you our net cash in March was 30.4. We're at 30.5. Despite COVID, we're managing to maintain healthy cash levels, and we're at a fairly similar stage as compared to where we were 3 months back. One key thing that you might wish to note here is our long-term debt continues to reduce, down from 5.7 in the last quarter to 4.6 crores in this quarter. Moving forward, I'll just run you through some of the corporate updates, and then I'll also invite Satya to join me and in closing the session. One of the key things that was approved yesterday in our board meeting was the stock split. The new face value of our shares will be 5 rupees, and obviously the reason we're doing this is to increase liquidity and to invite higher participation from retail shareholders. On some of the other key points from a corporate perspective, some of you would remember that our merger of 5 entities into the parent entity was something that we filed a couple of years ago, and because of COVID had been delayed. In fact, we hadn't had our NCLT second hearing meeting had been postponed for the better part of the last year on account of COVID. I'm happy to share that that meeting finally took place on 30th July, and the next meeting date, which is for the final hearing, will be held in October once the tax authorities file their report. Faridabad land sale is in progress. We hope to conclude it in this month. Satya, would you like to come in for the last 3 points? The fundraise update.
Sure. And yeah. Okay, on the fundraise, and all these 3 points are works or projects in progress. And as all of us know, unless these are done, accomplished, and the ink dries up on paper and cash hits the bank, it's a project in progress. I would like to place that caveat right up front. But in the spirit of keeping you updated from one call to the next quarter, I'll cover these briefly. On the fundraise part, Keystone fundraise unfortunately had to be deferred by about 60 days because Piyush, who's the president and CEO of our enterprise business, he himself was down for almost 6.5, 7 weeks, hospitalized for long. So in the middle of the tracks, we had to stop, and that has just got resumed about 10 days ago. On the CLEDUCATE side, there are 4 sincere, serious conversations in progress. Those are at the stage of some presentations, con sheets, and so on. So we'll keep you updated as we progress there. And the reason why that was becoming one of the options in some ways can be connected to the next bullet. As you know, as you are aware, one of the things that we are trying to do over the next 24 months is to be able to grow from leadership in 3 business segments, which is MBA, law, and IPM, and add UPSC to it. And in that context, we at the board level have been inclined to looking at it more as a buy instead of a build. So there is some serious conversation that's happening that's at the term sheet stage, which could be a if it translates into a done project, we will fund it through a mix of accruals plus maybe a little bit of debt, maybe private equity, the money that we raise. But what it would do if it is successful is to get us from the current position in UPSC and catapult us into the top 3. And that could be very, very interesting and exciting, because that's a very large segment of government jobs. And UPSC sits right at the apex of a very, very massive uh, government sector job opportunity with over 1.3 crore aspirants. And UPSC aspirants alone are about 15 lakhs. And when you compare it with MBA aspirants, that's almost 5 to 7 times the number of aspirants who take MBA exam. The last bullet, Arjun, you'll have to move the slide, the slide a little bit. I'm blinded by the. Is it? Arjun? Perhaps you are on mute. The last bullet is about an update on 361-degree Minds, which is one of the investee companies of Career Launcher. They are in the skills education space, based out of Chennai, run by seasoned entrepreneurs. And we hold some strategic stake in them. And the update briefly that I wanted to give you was that in their journey, they are raising some money. And what it does is it translates some of the CL's earlier investments into equity, because it was a CCPS option. And the fund that they are raising is at about 106 crore pre-money, and they're raising just under $1 million. And that would translate into significant uptick for the CL investment in 361-degree Minds. The more interesting thing is that they're doing very, very exciting, very interesting work, and it might have some strategic implications as the future unfolds. As of now, this again is just an update. As and when each of these translate into specific events or milestones, you will find these updated on the investor zone for you to take a look at. I'll pause.
Thanks, Satya. We'll now throw the floor open to any questions. Because I had to take this slide down for a few seconds, I'm just putting it back out online. And then after a couple of minutes, I'll move on to the thank you slide, which has our email addresses, where you can write back into us if you have any questions.
Arjun, you want to pick up? There are a couple of questions here in the chat box from Aniket, and then I can see another hand going up too. Yeah,
I'll just take a look at it. Thanks.
Is the audio better now? There was a message from somebody saying is audio is slightly low.
I can hear you loud and clear, Satya. I'll start. Can you hear me?
Yeah, I can.
Okay. So I'll start by sharing Aniket's first question. He's asking about the segment-wise revenue contribution, and also from the test prep business. I'll just for a second stop sharing my screen. And
so Aniket, some of the segment-wise shares we do share at a summary level, but some more we hold them back for obvious reasons of competitive information. Our business has it still doesn't have the ORG mark kind of data publishing. So from a competitive information security point of view, some granular details we refrain from sharing. But broad contours can be shared by Arjun and even put up on the website once it is audited and approved by the appropriate senior guys.
Thanks, Satya. Just to also share that, Aniket, if you look at our consolidated results page, it has the 5 segments shared in that: the partner, digital, consumer publishing, enterprise corporate, which is predominantly the Keystone business, the enterprise institutional, and others. So you'll get the specific information that you were desiring if you take a look at that page. I'll just put it on the screen so that the same becomes available for you to check out later on. I'll move on to the next question in the meantime.
On the fundraise part, I'll take this, Arjun. On the fundraise part, Keystone, we could assume that it quite literally started off 10 days ago. So as I mentioned in the last call, assume that it's a 90-day journey. So another 80 days for Keystone. And all of us are seasoned enough in this that it takes anywhere between 3 to 6 months. On the CL side, I think the place where we may have to begin to have internal confabulations, discussions to say a yes or a no, and the term sheet based discussions, that might happen by the time we get to the first week of September. In my view, next 30-40 days, CL, we should be in a position to either say yes and pick up an investment, or say a no and move on. And as you know, I wanted to be reasonably clear that our fundraising is for very important strategic reasons, to fuel growth, to use it to fund our acquisitions or acceleration, brand building. Those are the kind of three important application of funds that we see for the funds that we are raising. And we will be very mindful of the value that it attributes to the overall business when we engage with when the board subcommittee engages with the potential investors. I hope I'm clear on that. Arjun, this question you might want to take. How much money is
Satya, as you rightly said, there's a question on the update on our legal matter with BNS Strategy Services. I'd just like to share that this matter is currently sub judice, and the arbitration proceedings are in progress. There is a recoverable from BNS into CLIP, which is in excess of 4 crores. And there is also a transaction portion to be completed as part of our original term sheet, all of which is currently in progress. And we'll update you on the same as and when we can. As I mentioned, the matter is currently sub judice, so I will limit myself to sharing just that for the time being.
Arjun, I saw Krishna Kumar raise his hand. Maybe you would want to check if that has been typed and sent. Am I missing it, or you want to?
I'd request.
Hi, hi Arjun, hi Satya. Congrats on a set of improved performance across the board. Wish you better times ahead. My question, is first on 361 degrees. Could you spend a minute walking us through the business there, and what is the kind of potential that we see there in terms of opportunities? If you can throw some light.
Yeah, sure. Thanks, KK. Thanks for joining. Broadly, they're doing 2 businesses, but before that, the overarching strength of it is that they do the entirely cloud-based and scalable curriculum. And the 2 kinds of businesses that they do are one is about getting your mainstream university degree. For example, if you're an Annamalai University student, you can enroll with Annamalai, but the learnings, etc., for your BCom, BA, etc., you would do it on the 361 degree Minds platform. So that's one part of their business. The other part of their business are these skill-based programs that enhance your employability. You get from a good job to a better job, and both of these are delivered online. They do have a little bit of a contribution coming from partners who act as reseller partners, and their programs and products and segments are extremely complementary to where CL focuses. So if it picks up well, and if there are some synergies in future, it could be a good candidate for CL and 361DM to engage at a strategic level. However, at this point in time, it just might be premature. We find the team very competent, and that was what led us to invest a small amount of money about 3 or 4 years ago. I hope that answers your question, KK. Additionally, Arjun, what I would suggest is see if we can get a brief summary from 361 DM management, a 1.5 page document, maybe plus a PPT, and we could put it up on the investor zone as a response to this query from investors.
Sounds good. We'll get it done.
KK, post this investment by them, we would hold. Arjun, could you please unmute KK?
Yes, sure.
I see him asking a question.
Yeah, thanks. Good, Satya sir.
Yeah, I think post this, we would be holding anywhere between maybe 12 to 14%. They are still at the term sheet negotiation, etc. stage. That's what we would hold of this, and the pre-money investment is at 106 crores, and they are raising just a little less than $1 million in this phase now. Arjun, there were some other hands also going up.
Yes, there's a hand raised from Sandeep Talwar.
Okay.
Sandeep, I've given you speaking rights.
No, my question was about the amount we held. I think Satya answered that. Thanks.
Thanks, Sandeep.
Thanks, Sandeep.
Right, Satya, if there are no more questions.
There is one from Muthu Kumar. Arjun, I'll pick it up broadly. Muthu, when the Keystone digital businesses in its new avatar, it is picking up, and we are seeing early signs of it. The EBITDA margins will improve, and hopefully it will improve very visibly in 2 to 4 quarters. That's one area I see margins improving. And within test prep, if we are able to graduate to doing the premium programs in UPSC, along with our what is our core cash cow, which is MBA law and IPM, when those volumes grow, I think that also will lead to EBITDA margins growing on the test prep side. One particular point that I would like to mention in continuation with that EBITDA question, see the profitability becoming non-linear on the consumer side, though it is equally applicable on the and there are 6 months. Hopefully they will bear fruit over the next 2 or 3 quarters. One is, this onlineization of learnings is yielding to a very changed pedagogical timetable as far as our interactions with students are concerned. Earlier, we used to have small batch sizes. They would come 3 to 4 times a week. That has already now made way to large batches, which are all delivered simultaneously, wherein a single faculty, instead of handling 30 or 40 students, he's now handling 300 to 400 students, because it's a live online broadcast. And when that kind of picks up, and this already happened a little bit during the COVID era, the productivity per fixed resource that you do, that's altering significantly. Number 2, when in the new areas that we are entering, when we are able to graduate to the premium programs. So, for example, a UPSC program is a 1 lakh rupee program, premium one. Similarly, an IPM 2-year program or a CUCET 2-year program, these are all premium programs that always end up delivering non-linear profits once you cross a threshold and you are able to build leadership there. I'm looking at these two enabling our profitability growth as we move 2 to 4 quarters from now. Yeah, Arjun, over to you. If there is no more, we could.
That's a late question coming in, I think, Satya. Oh, no, so thanks from Muthu Kumar. You're welcome, Muthu, and it's been our pleasure to host all of you this evening. We'll be back with our ATM on 31st August. We would invite all shareholders to join us again for that. Thank you so much for joining us today and have a good evening.
Thank you. Thank you, everybody. Thanks, Arjun.
Recording stopped.